Hello, everyone. We will begin the webinar in 2 minutes at 10:02 to allow everyone time to join, settle down, and perhaps grab a cup of coffee. Hello, everyone, and a warm welcome to the first webinar in our new series, where we will be addressing the modern day challenges introduced by KYC. KYC, as if the 21st century did not bring us enough acronyms. Now we must also deal with FICA, KYC, RDV, CFT, and AML. And we have to do this ASAP. Before we jump into today's topic, we are going to start two polls at different intervals within the session. The first poll, we would like to know how many of you prefer utilizing one vendor to solve for KYC opposed to multiple vendors. The second poll, do you deploy one KYC strategy across your business, or do you have multiple KYC strategies assigned per product or department? We will keep an eye on the polls and review just before the end of the session. Now, by way of introduction, my name is Creason Moodley. I'm a senior executive at Datanamix Credit Bureau. I've been in the bureau industry for 13 years, specializing in credit granting and KYC solutions. I previously worked for one of the largest credit bureaus in South Africa. I'm also joined by my commercial director and co-host, Sean Bennett, who has spent 12 years in the bureau space. In terms of the structure of the webinar, you may post all questions that you have per segment on the Q&A. Sean will monitor the floor and attend to any questions you have posted on the Q&A section. Upon listening to the problems that business owners, AML, risk compliance managers face every day when it comes to KYC, I realized that traditional credit bureaus will not be able to solve these issues completely and sustainably. Issues caused by modern day problems are better addressed by modernized businesses that are agile and understand modern technology. Dynamics Credit Bureau is a tech company. It lives and breathes within a tech group that has crafted some of the most complex data and automation solutions to solve real world problems in some of South Africa's largest banks, insurers, and financial service providers. Right, let's give you a breakdown of the session. On the agenda for today, we are going to cover an introduction to Datanamix, the problem statement, our KYC framework, the solution framework, solution statements. And in closing, we will review the poll results, answer any further questions, and keep you abreast of what's coming in terms of future webinars in this series. Datanamix is a registered credit bureau with the NCR and CBA from a regulatory perspective. We offer risk solutions in both the business to consumer and business to business spaces. We provide direct access to golden source data assets such as DHA, SACRA, the conduit of credit information in the country, SIPC, the Register of Companies, and the Deeds Office nationwide. We offer risk solutions throughout the customer lifecycle, ranging from identity, account origination, account management, and collections. KYC automation is in the heart of our business, and we're constantly striving to innovate in the space. To mention some of the key differences within our bureau is problem solving with the use of cutting edge tech, introduction of AI-led processes, automated decisioning, marrying data automation, customer experience, and technology to solve modern problems, and placing innovation in the forefront of our offering. We are a global information provider in terms of our AML data that accesses all this available globally. Our phone ID solution provides risk and SIM swap information worldwide. We also provide a global de-identified verification service. All the solutions and data assets we discussed today will be available in 3 channels of consumption: our web portal for the compliance and risk officers who want to take a closer look, APIs for direct integration, Batch, our bulk processing environment. Let's look at the problem statement. Based on our experience and liaising with customers that we engage daily in relation to solving for KYC, we have come across a couple of themes that cause major problems and additional risk to business in the way of FICA compliance. We have identified 2 main problems that we want to expand on today. The first is what we call siloed KYC. This is where businesses employ KYC strategies at a product level instead of a customer level. To add complexities, there are instances where multiple vendors supply the same service or different services to multiple business areas or divisions. Siloed, the siloed KYC approach often creates an incomplete customer data pool, which leads to non-compliance from a FICA perspective. The second problem comes directly from our AML compliance officers. AML conclusion matching. Automated decision matching on AML data is not an exact science. This is what we hear when engaging the market. Tremendous effort allocation is required to confirm actual matches for customers flagged on the AML lists. Now, what makes confirming AML customer matching difficult? Firstly, to confirm a search on an AML service, you would need to submit the full name and date of birth. The output data is returned with the full name, date of birth, potential PIP and PEP, sanctions, and enforcement data. The complexity within this is that many people around the world share the same names. Now, let's keep that in the back of our minds. Let's visualize siloed KYC. This is a perfect illustration of silo KYC. On the left-hand side, you have all of the data assets required to solve for KYC, and on the right, you have the business divisions or departments. In a siloed KYC scenario, each department will have its own KYC data requirements, meaning each division will only process 50% of the data assets required to solve for KYC. This leaves gaps in the data pool and unchecked regulatory boxes, which leads to non-compliance. The buying of data assets on the same customers occurs more than once per department. To add complexity to this, we find that there are multiple vendors per division or department offering different data assets. Let's take a look at the pitfalls that siloed KYC creates. The first is leveraging customer insights from a group perspective will be non-existent as businesses won't be able to create the one customer view. As critical data assets will be missing from the data pool that is required to solve for FICA, which is caused by silo KYC. Silo KYC also leads to an increase in spend based on the timing of when the data is bought. At a division level, multiple data assets would need to be processed again to obtain a completed pool of data and close the gaps required to solve for KYC. The gaps within a customer data pool and timing of processing from a recency perspective will lead to non-compliance. Multiple vendors, this will cause data ingestion issues due to ununiform data structures or formats that you inherit by utilizing multiple vendors. Also considering time and effort that goes into managing multiple vendors. How do we begin to solve for siloed KYC in the short and long term? To effectively shift focus from siloed KYC environment to a customer-centric KYC environment, you would need a framework. Our framework to effectively start the transition from siloed KYC to a customer-centric KYC consists of 4 stages. Identity, identity verification of the customer, verification of addresses and contact information, source of funds, which is made up of employment, occupation, job status, and income estimation, screening for anti-money laundering, and counter-financing of terrorism. Our KYC framework coincides with FICA legislation. What is FICA legislation in short form? 1. Positive customer identity validation. 2. Due diligence in terms of verifying your customer's other data variables. 3. Prevention of money laundering and financing of terrorism. 4. Ongoing monitoring and reporting of high risk consumers or entities. Now that we've had a look at the guiding principles from a framework and legislative perspective, let's take a look at the solution. Our solution is built around shifting the focus from siloed KYC treatments in the account management stage to a customer-centric treatment. 1. We have all of the required data assets to solve for KYC under one roof. Identity, addresses, source data, AML, and employment. 2. We utilize our batch environment to solve for KYC treatments in the account management space, as it was built for bulk processing of records against data assets. Firstly, the batch environment allows you to choose data assets on a field level to suit your exact requirements. Within the batch environment, you may process millions of records simultaneously across many data assets. All we require as an input to start the processing in the batch space is the customer ID number. We assign each consumer record with a unique reference to allow for seamless tracking via the multiple data treatments applied. We can structure the data and output formats to suit your exact ingestion requirements. We can provide each data asset output in one line per customer within the file to show uniformity. 3. We have introduced AI to our data assets, which require matching and decisioning, such as source of funds segment of the framework. A, We have deployed a ChatGPT bot to derive employment industry and job status from open text fields such as employer name and occupation that is available from a SACRA perspective. B, we are currently looking to expand AI involvement in our data asset processing in other segments of the KYC framework, such as address matching and AML conclusive match decisioning. In terms of innovation, we have implemented automation in the following segments of the KYC framework. A, address matching. We provide the latest addresses found on the Bureau, accompanied by the credit sources, which is utilized in deriving due diligence. We have moved away from address matching, which is quite prevalent in the space. This is where we would take the customer's addresses and conduct matching to addresses found on the Bureau. This address matching process led to discrepancies in the match rates due to differences in the address structures. B. AML conclusive matching. In other words, once there is a hit on a customer, conclusive match decisioning is applied on deriving if this is actually your customer found on the list or not. Source of funds is another segment that we have managed to automate with analytics and derive income and AI to conduct due diligence on employment status. 4. Let's talk about the future. When we look at the batch environment, there is a lot of human intervention within the workflow and data asset processing. Our customers asked us to build a batch environment of the future to fully automate the space. They asked for this to streamline the KYC compliance process and to ensure it solves problems well into the future. So we went off and created a bespoke API which caters for the future of batch processing and fully automates the batch environment. Our batch API delivers complete automation in the following disciplines: sending and receiving files securely, accessing and processing against all required data assets, automated matching and decisioning, AI-led processes on all data assets where required, automated output formatting and desired file structures, also providing the option to invoke monitoring on a set of customers of your choosing as and when required. Now let's take a closer look at our data assets that we use to conduct due diligence from a FICA compliance perspective. These are the golden source data assets we exclusively utilize to conduct due diligence. It all starts with identity information. Direct to DHA, we receive the full string of ID card, excuse me, book issued dates, names, block statuses, marital, deceased, and country of birth information. Physical addresses. We provide the latest on file linked to credit sources who are reporting the same address from a SACRA perspective, which we call our level 1 treatment. Our level 2 treatment in the address space includes geocoded addresses to assist with populating the right address format, for example, street name, number, suburb, city, province, postal code, and country. Contact data, we provide the latest found on the Bureau, work, home, and cell, which is credit source linked and date stamped, which we call our level 1 treatment. Our level 2 treatment on contact data would be introducing SIM swap and telco carrier information, which is derived from our phone ID solution that is available in 240 territories around the world. The employment and income estimation data assets together makes up our source of funds KYC segment. We provide the latest employer name, occupation, AI-derived industry, and employment status. To, de- to derive income estimation, we utilize the regulated bureau expenses such as a consumer's banking, retail, telco accounts, etc., and estimated unregulated expenses such as groceries, travel, rent, or other living expenses. Unregulated expenses is derived by utilizing an algorithm provided by the NCR. Together, regulated and unregulated expenses is utilized to derive estimated income amount. Credit information. This data set is utilized to enrich your data pool as you can add adverse information, credit scores, deeds, payment profile information in the way of deriving further insights and predict risk. Now, let's take a closer look at anti-money laundering, the last portion of our due diligence within our framework. Anti-money laundering. We have access to all lists available globally via our premium AML solution, which consists of four main data principles: politically exposed persons, prominent influential people, sanctions lists, adverse media, and crime data. As per our problem statement, customers that we have engaged advised that the most common and time-consuming aspect of screening customers for AML consists of conclusively proving that a customer found on AML lists is actually your customer. This problem is also compounded when related parties to a customer are found on the AML lists. This is a problem as there are no unique identifiers within this vast data pool that you can use to conduct exact matching. Yes, it is not an exact science, but if you follow our KYC framework step by step, you will already be in a better position to start conducting conclusive customer matching on customers that are found on AML lists. Our KYC framework provides all the information that you require to conduct conclusive customer matching. One, you will have all of the identity, gender, country of birth information from DHA. Two, you will have all of the address data. Three, you will have all of the contact information. And four, you will have all of the employment information. All these data assets are available from our AML output to conduct conclusive matching to make our customers' lives a whole lot better. We have successfully automated AML conclusive matching where we can match and assign customers in three groupings in real time. One, confirmed matches. Two, review slash partial matches. Or three, no result slash false positives. We have successfully automated AML conclusive matching with the use of bespoke algorithms and automation tech. For example, conclusive automation matching algorithms allows us to narrow down 1 million AML match results to around 15,000 match results by automatic assignment of three specific groupings. We have also made provision for conclusive matching on related parties, which are the mother, father, brother, sister, etc., all the related parties to your customer. This allows our customers to focus their efforts on customer records that require further due diligence, and they love this fact as they can effort allocate where risk is apparent. Let's talk about the value you gain in terms of transitioning from silo KYC treatments to customer-centric data treatments. Customer-centric KYC allows you to obtain one view of the customer throughout your organization, allowing you to manage and report risk. This framework also makes provision for you to leverage data and insights at an organization level rather than a product level. Through us, you gain complete automation, decisioning, and flexibility in the way of solving the KYC. Throughout our robust framework, we marry data uniformity, risk, and customer experience seamlessly, and in turn, we ensure FICA compliance. This framework also provides you with the benefit to channel your resources to areas that matter the most. By having all the required data, customer-centric processes, and automation all under one roof, this allows you to drive down your time spent and costs on KYC treatments quite drastically. As we come to a close for today's session, let's review and discuss the polls that we set up in the beginning of the session. The first poll that we set up, we wanted to know how many of you prefer utilizing one vendor to solve for KYC opposed to multiple vendors. The second poll, do you deploy one KYC strategy across your business, or do you deploy, or do you have rather multiple KYC strategies assigned per product or department? Sean, may you please read the results of poll 1 and 2?
Thank you, Kristen, for that. So if you guys haven't had an opportunity to vote, you can just click the blue icon poll on your little dashboard icon and you can quickly vote. But for now, on the first poll, just to repeat, do you prefer utilizing one or multiple vendors to solve KYC in your organization? The two options were, we prefer to use one vendor to solve our KYC requirements. And option number two, would you prefer to use multiple vendors to solve our KYC requirements? And this vote, we hit a 50-50, Kristen, in the poll with the audience.
That is very interesting.
On the second poll, the first, just to repeat the question or the poll question, do you deploy one KYC strategy across your business, or do you have multiple strategies assigned per product or department? The two options were, we deploy one KYC strategy across our business. Option number two, we deploy multiple KYC strategies per product and department. And again, here we got 50-50. So very interesting. Thank you very much.
Very interesting indeed, Sean. Ladies and gentlemen, thank you for your time. If there are any further questions on the Q&A section that we didn't get to, or if there are specifics that you require more information on, we will reach out and discuss them with you directly. We hope that we have delivered value-driven insight in covering today's topic. We look forward to engaging with you all soon. Stay tuned for the next upcoming webinar where we discuss all things thin file, new to credit, and alternate KYC data. Take care and see you all soon. Goodbye.